They say a picture is worth 1,000 words, but words fall short to describe these pictures, this feeling, this emotion that possibly every single fan of Indian cricket has been going through since Saturday night. An 11-year wait for an ICC trophy, a 13-year wait for a World Cup, and a 17-year wait for a second World T20 title. All of it came to an end on Saturday night as 11 determined men out of nowhere, having knocked on the doors of victory for an eternity, finally broke that door down, bringing joy to 140 crore Indians who are out on the streets, celebrating, dancing, and for that moment, forgetting their hardships and put behind the scarring memories of the 19th of November 2023. Hello and welcome. This is Power Breakfast on CNBC-TV18, the first edition after India, the men in blue, were crowned world champions in Barbados. I am Hormuz Fatakia, and these are the headlines this morning. Stocks closed largely lower on Wall Street, even as the S&P 500 and the Nasdaq closed the first half of the year with gains. Rate cut hopes also get a boost as core personal expenditure data indicates inflation has slowed to its lowest in over 3 years. Asian markets trade mixed even as data indicates that the manufacturing sector in China continues to slow. The GIFT Nifty is also indicating a muted start for the Indian markets. Crude prices gain for the third straight week. Brent trades above $85 a barrel as fears of a war between Hezbollah and Israel grow. Gold prices rise, supported by an encouraging inflation report in the United States. The government reports a revenue surplus of 90,000 crore for the April to May period, aided by a strong cash balance and flows. Fiscal deficit reaches just 50,000 crores, which is 3% of the budget estimate. Core sector industries slow down in May, with growth coming in at 6.3% compared to 6.7% sequentially. And after 11 agonizing years, the wait is finally over. Team India are world champions after breaking the ICC curse and redeeming themselves after the 2023 World Cup heartbreak with a dramatic win over South Africa in the World T20 final. It's the start of a new week, a new month as well. So let's begin first up with a look at how the Asian markets are faring. It's a positive start. It's a mixed picture actually across the Asia Pacific, but the Japanese markets are trading in gains, as is the Taiwanese index is up 0.5%. The Japanese index, the Nikkei, is trading with gains of close to 1%. The Hang Seng today is shut on account of a holiday, and data coming in from China is also suggesting that the economy was in contraction mode for the second month in a row, as the PMI data coming in at 49.5 and a reading below 50 indicates that the economy is in contraction. Pull up the GIFT Nifty as well, and that too after the last couple of weeks that we have had for the Indian markets. An absolutely flat start as suggested by the implied open, 7 points low. So we'll see how the market opens this week. Now moving on to the US markets, Wall Street ended lower on Friday. The S&P 500 slipped over 0.4%, while the tech-heavy Nasdaq lost 0.7%. Both the indices touched all-time intraday highs before pulling back. The Dow Jones also dropped close to 50 points. Now all three indices have gained ground in June. The Nasdaq once again leading the pack with a month-to-date rally of nearly 6%. The S&P 500 and the Dow Jones gained 3.5% and 1.1% respectively. Now in stock-specific action, Nike plummeted over 19% after the company's fourth quarter revenue came in below expectations and the company reduced its full-year guidance. An important economic measure for the Federal Reserve showed that the inflation in May has slowed to its lowest annual rate in more than 3 years. CNBC's Rick Santelli joins us with the details of the PCE report.
If we look at income for May, it was up 0.5%, better than expected, and it's the juiciest level in ties March when it was up 0.5%. We started the year up 1.1%. Now, if we look at spending is less than expected. So the income's holding up, the spending dropping a bit, up 0.2, which actually was last month, but last month got revised to only up 0.1. Real spending adjusting for inflation up 0.3. In March, it was up 0.4, and at the beginning of the year, it was down 0.3. If we look at the price indices, and this is the main reason we're seeing the market move that we are with lower interest rates, PCE price index month over month unchanged as expected, but that does follow up 0.3. Unchanged equals November of last year. To find a smaller number, you're going down 0.4%. That's all the way back in April of 2020. If you look at a month over month of the PCE price, what we're looking at there, year over year, is 2.6. And that is 1/10 less than last look. So we're making some progress. It's still not 2%, but many say it doesn't matter if you reach the target as long as the Fed is confident we're going to get closer to 2%. 2.6 actually isn't the lowest of the year. We had 2.5 the first 2 months of the year, just to put a face on it. Now, if you look at PCE core, and this is a month over month, it's up 1/10, exactly as expected. In the rearview mirror, there was actually an upward revision from up 0.2 to up 0.3, up 1/10. To find a smaller number, you're going back to November of last year when it was up 0.09. And finally, year over year, 2.6. This is the core, maybe the most important number, and that follows 2.8. 2.6 is the lightest level, and I'm going to have to go back a bit here. 2.6 is the lightest level going all the way back to March of 21 when it was 2.25.
And let us now listen in to some important opinion coming in from the experts on the latest PCE report and the US inflation outlook.
Well, it came in as expected, as
Right.
you said, and it is just additional news that monetary policy is working, inflation is gradually cooling. That's a relief for businesses and households who have been struggling with persistently high inflation. It's good news for how policy is working, but there's more work to do. If it's really challenging to look anywhere and not see monetary policy working, we have growth slowing, spending slowing, the labor market slowing, inflation coming down. That's how policy works. Now, it's taking longer than we'd all like, of course, but that doesn't mean it's not working. If inflation stays stickier than we would like or comes down more slowly than expected, then, of course, we'd have to hold higher for longer. That is our commitment.
It's a bit trickier of a picture. We're now saying we had 4 months of bad inflation, followed by 1 good month of inflation. So we can debate on what the new trend is. Either way, I think it means the Fed needs more time to see where we are. So I don't think 0.1s is where we are, but obviously we'll see going forward. Good reports that we have had recently tell you, wow, you need an awful lot of deflation in things like goods or non-shelter services inflation to get inflation to 2. We don't think they cut until December. We have them cutting to 350 to 375. So definitely a higher for longer outlook from us. So still confident inflation's coming down.
And that's all we have on the global market action. But how will all of these overnight cues impact our Indian markets? We have our research team joining in with how the trade setup looks like and the stocks that are likely to be in the news. First up, Sudarshan joins in to get us all the market cues that we need to watch out for today. Sudarshan, good morning. What is the setup looking like today?
Good morning, Hormaz. So if you talk about the last week, the record run, that is non-stop record run, has continued for Indian market, and we saw major gains for all the indices, and all the indices have hit record highs on almost each day last week, with closing with gains on 4 of 5 days, and that led to sensex and Nifty posting gains of more than 2% each, and for Nifty Bank it was up more than 1%. And the sectors which helped the market over last 1 week were majorly energy, especially Reliance, and the IT sector. But it seems now, if we talk about just about the Friday session, nervousness likely to have built in, and we saw a sharp downtick from record highs on Friday, dragged by banking names like ICICI, Axis, and IndusInd Bank. Even Bharti saw a fall of almost 7% from days high after the tariff hike was announced. But in mid-cap space, buying has continued, and that was the reason market breadth was in favor of advances even on Friday, and it was even reflected in the institutional data. We saw big buying by DIs. Obviously, we'll have to factor in block deal flows here. For today, we have global cues that are largely subdued. US markets saw a close in the red on Friday. Even 10-year yield has jumped and is now back to 4.40%. Crude too remains at elevated levels, and following all the cues, GIFT Nifty is indicating a start with minor cuts. For the cues to watch, we'll have monthly auto sales, and lastly, companies will start reporting quarterly updates ahead of their quarterly earnings.
Plenty of cues to watch out for. Sudarshan, thanks a lot for that update. Now over to Vamakshi, who would list out the stocks you need to watch out for in today's session. Vamakshi, good morning. What's on your list?
Well, good morning, Hormas. Let me first take you through GSW Energy. Its arm GSW Neo Energy has received an LOA for 300 megawatt wind solar hybrid capacity from SJVN. Zydus Life is the next stock that we will be focusing on. They have entered into a licensing agreement with Dr. Reddy's for co-marketing of pertuzumab biosimilar, which is used in the treatment for breast cancer patients in India. Orchid Pharma has partnered with Cipla to launch antibiotic cefepime and metazobactam in India. Ultratech Cement has commissioned an additional 3.35 MTPA clinker and 1.8 MTPA grinding capacity at its existing units in Andhra Pradesh. Godrej Properties has acquired a leasehold rights for 11-acre land parcel in Pune, and the estimated revenue potential from this is 1,800 crores. Additionally, they have acquired 7 acres of land in Bengaluru with an estimated revenue potential of 1,200 crores. Signature Global has reported sales worth almost 2,700 crores for their residential project in Gurugram. Irida has reported a business update. Loan sanctioned was up nearly 4 times on a YOY basis at 9,136 crores, and the loan disbursements were up nearly 68% YOY. Neogen Chemical, the promoter, has divested nearly 6% ownership in the company. SBI Mutual Fund and White Oak Group has acquired the promoter stake. Naveen Fluorine will be raising funds worth almost 750 crores via QIP and other modes. Polymedicure's board has also given a nod to 1,000 crore QIP. Bank of Baroda has received demand order worth almost 1,070 crores from the Income Tax Department, and HDFC Life, on the other hand, has received GST demand and penalty order worth almost 265 crores from the Maharashtra Tax Department.
Plenty of stocks to watch out for as always. Vamakshi, thanks a lot for that. Time for a short break here. Up next, when we return, we get you the fiscal deficit data for the month of April to May. Stay tuned. Back on the other side. Back with us here on Power Breakfast, and on to some macro data now. The government has reported a revenue surplus of 90,000 crore rupees for the April to May period, aided by a strong cash balance of the centre, clubbed with buoyant revenues, including the RBI dividend. Now, fiscal deficit for the same period has reached just 50,000 crore rupees, which is 3% of the budgeted estimate. Sapna Das now joins in to explain what this means. Sapna, a strong cash position then for the government.
Absolutely, bang on. Strong cash position of the government, plus you have the added impact of the RBI dividend. So if you look at the May numbers, the May numbers standalone are even better than the April-May. But having said that, well, this is good news just ahead of the full budget. No revenue deficit reported. In fact, a revenue surplus around 90,000 crores versus 45,000 crores gap that was reported last year. Deficit of around just 3% of the full budget aim versus almost 12% in FY24. However, a bit of a worry in terms of the spend numbers. Overall expenditure is down, and particularly capex is considerably lower than what had happened last year in the same period, April to May. Last year, it was almost around 70 to 80%. This year is barely 30%. So some savings, so-called savings also coming in from there. So that has aided the government's overall fiscal management. But we must keep in mind that even primary deficit is negative, which means that basically, no pressure for, big, large market borrowings is going on as is. And they have also been doing a lot of buybacks because they have that surplus cash which they want to deploy in the most optimal manner. So this is good news before the budget. Even the 50,000 odd crore revenue fiscal deficit as of now is primarily because the interest payments are higher in the current financial year. The interest that the central government pays on its market borrowings. Of course, but the first quarter is worked out. We'll have to wait and watch and see how this pans out, and if there is any kind of a incentive, any kind of relief that comes through in the full budget, which will impact the fisc down the line. We have to wait and watch for that.
Sapna, thanks a lot for that update. Now, Commerce and Industry Minister Piyush Goyal opened India's first mega common facility centre at the SEEPS SEZ in Mumbai for the gem and jewellery industry. Now, in a conversation with CNBC-TV18, the minister commented on the growth and the future of the jewellery sector in India and continued to affirm India's growth as an export-intensive economy. Listen in.
a lot of challenge before us in terms of global crisis, wars, the Red Sea conflict, slowing international trade. But I'm delighted that India growth story is intact. The world looks up to India for their needs. The world would like to expand investment and trade with India. And we are confident that we'll exceed $800 billion this year.
Out here at SEPZ, there is a first-of-a-kind 3D printing machine for gems and jewelry. It's a plug-and-play infrastructure which is being used not just by Indian manufacturers but also by manufacturers from other countries. Are there any specific demands from several sectors, given the fact that the government has just returned to power and also the budget is coming up? Any specific demands by several industry players?
The Prime Minister is very committed to grow the gem and jewelry business, particularly since it's very labor intensive and provides employment to lakhs of young men and women. This CFC, Common Facilities Center, is a one of its kind. Bharat Ratnam, as it's called, is the best in the world. And this is what Prime Minister Modi always tells us. India should now reflect 1.4 billion people's rising aspirations and strength. And I'm very confident this will harbinger good growth in this sector. In Navi Mumbai, we are also promoting a large jewelry park, which will provide employment to at least 1 lakh people. And Mumbai will become a preeminent center in the world for this sector. In terms of the future needs of different sectors, we are in continuous dialogue. Only yesterday, day before yesterday, we had a very detailed interaction with all EPCs and industry associations, and this government is committed to promote growth and take prosperity to the last man at the bottom of the pyramid.
And from commerce and industry to the news that has dominated headlines all over the weekend, after 11 years filled with heartbreak and disappointment, Team India finally broke the jinx to become world champions. Now, in a nail-biting encounter, Indian bowlers led by Jasprit Bumrah defended a total of 176 from a near impossible position to clinch the World T20 title in an emphatic fashion. Now, batting first, the Indians suffered 3 early setbacks, but a fighting 76 from Virat Kohli saw them put up a total of 176. Now, Henrik Klaasen scored 52 of 27 balls and almost took the game away from India, but a couple of key wickets from Bumrah and Hardik Pandya saw the South Africans fall short of the target by 7 runs, giving India its first ICC trophy in 11 years after the 2013 Champions Trophy. Now, with the T20 World Cup triumph, an era of Indian cricket also comes to an end, with Virat Kohli, Rohit Sharma and Ravindra Jadeja announcing their retirement from T20 internationals. The match on Saturday also marked the last time Rahul Dravid was at the helm of the Indian cricket team as coach. Hardik Pandya is also expected to succeed Rohit Sharma as the captain in T20 internationals. This era of transition will begin as early as next week, when India takes on Zimbabwe in a 5-match T20 series beginning on the 6th of July, which will be captained by Shubman Gill. And in some other national news developments, Delhi Chief Minister Arvind Kejriwal has been sent to 14 days of judicial custody. That is till the 12th of July in the Delhi liquor policy case. This comes after the court earlier reserved an order on the CBI plea seeking judicial custody of the Chief Minister. In the application given to the Rouse Avenue Court, the CBI said that Arvind Kejriwal was not cooperating in the investigation and was deliberately avoiding giving direct answers to the questions posed to him. The Aam Aadmi Party members have been protesting against the decision following his arrest. Time for a short break here on Power Breakfast. Up next, we get you cues from the commodities space. Stay tuned. Back on the other side. Back with us here on Power Breakfast, and as promised, Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. What are you picking up?
Thank you for that, Hormuz. Well, I'm looking at crude first of all because we've seen prices gain up for 3 straight weeks and crude is up 6% for the month of June. July has started on a positive note as well. When you look at the U.S. inflation data that came in on Friday, it was quite on the flat side. And then the markets also are looking at the U.S. demand picking up. It also is the hurricane season. And then the fear of Israel-Hezbollah war is another thing that is adding premium to prices. So crude continues to stay in positive. Gold as well, after gaining 5% in the month of June and 14% for the second quarter, is starting the month of July on a positive note as well. Here also, it is about rate cuts anticipation from the major central banks for the month of July and the current quarter is what really seems to be supportive. In overall metals as a sector, because the China business activity is still fragile, has declined for a second straight month to a 5-month lows, well, that is what is weighing onto the metals. So we have started yet another week and month week on for steel, copper, iron ore. All of this has started slightly on the negative side. But remember, it's going to be about the Powell speech on Tuesday and then the Fed June meeting minutes on Wednesday. These are a couple of things that the street will watch out for the next couple of days.
Manisha, thanks a lot for that update from the commodity space. And let's now take a look at how the Asian markets are doing this morning, whichever are open as we speak. The Japanese indexes continue to do well. The Nikkei is trading with gains of close to 0.9%. The Taiwanese index is still at a 0.5% gain, similar to the levels at where we began the show. Pull up the GIF Nifty as well. That was indicating an extremely flat start for our own markets. It continues to remain on that level. So it's going to be a subdued start for the week, and it shouldn't be a surprise considering the run-up that we have seen in the markets. But stock-specific activity will continue to take precedence. The auto stocks will be in focus today because of the sales numbers that come out through the day. Metal stocks will also be in focus, as Manisha was just highlighting the China manufacturing data that came in with the economy slipping into contraction for the second straight month. So we'll keep an eye out on the metal stocks as well. And even they have seen a very significant run up all through the month of June. So we will keep an eye out on all of these cues. But with that, it's a wrap on this edition of Power Breakfast from me and the team that put this show together. Thank you so much for watching. Bazaar Morning Call takes the action forward.